Hi, everyone. So Stride Ventures is a leading venture debt provider in the country, and this is our second edition of industry-wide venture debt report, which we'd like to present. So venture debt has evolved dramatically over the last 5 years. The annual deployment for the calendar year 2022 was about $800 million. It is 2.6 times the annual deployment of 2019. Even if you compare it with the last calendar year deployment of 2021, it was a 50% markup despite VC equity actually slowing down by 30%. So that has been on the back of a lot of education that has gone amongst LP partners, founders, as well as VC investors. VCs and founders are now more amenable than ever to augment some bit of debt in their capital structure for the right reasons, of course. So for use cases like working capital, capex, acquisition financing, and all of this eventually helps in dilution prevention for founders and existing shareholders. So this report is an endeavor to highlight the evolution that this asset class has had over the last couple of years. I don't know how to change the slides. I'll start with the findings of the report. Can somebody help me with changing the slides? Doesn't seem to be working. So this year, 80% of VCs and 80% of founders said that they're going to focus more on profitability, which is a drastic difference from last year, because we had done the survey same time last year, when 55% of VCs and 68% of founders had responded that they're going to focus more on growth compared to profitability. Working capital remained to be one of the most popular use cases for debt, followed by runway extension and capex. So one thing that I forgot to mention, 150 people responded to this survey. 50% of them were founders, 50% of them were VC partners. Flexibility of structures was the most important thing when it came to decision-making for taking debt from founders, followed by pricing. So pricing was not the main reason. I think post-COVID, most founders have realized that it's important to partner with lenders who help you through tough times, who don't actually start taking knee-jerk reactions. So flexible structure was the most important use case, value add for founders, followed by pricing. Also, one interesting finding was the last year, financial services was the most important sector in terms of deployment. But this year, we feel B2B, consumer, as well as EV will be the most choicest sectors for deployment in venture debt. One big reason is the digital lending guidelines that RBI has come up with, and a lot of financial services, fintech firms as such, are struggling to make sure that they're not breaching any of the nitty-gritties of the DLG guidelines with respect to FLDG, etc. Yeah. Hi, this wasn't working. Great. So yeah, this is a snapshot of the year 2022. So $800 million was deployed in venture debt across 170, 180 deals, with average deal value of about $4 to $5 million. As you can see, we already talked about it. It is a 2.8x jump in terms of annual deployment compared to 2019, when it was about $280 million. US has an annual venture debt deployment of about $32 billion, which is roughly 15% of the venture capital inflows that go into the country every year, vis-a-vis India, where venture debt is still about 5% of the venture capital money that flows into the ecosystem every year. So it's still underpenetrated because venture debt has been in existence in India for practically about 8 years or so, whereas in US it has been in existence for 25 years. So it is far more mature in the US markets. These are the various use cases of venture debt which have been covered in the panel before us also. We've already covered all of this. Yeah, so as I was saying, B2B commerce followed by consumer and EV are the most popular most popular sectors in terms of venture debt deployment, and it is because of the inherent working capital requirement as well as capex for EV OEMs as well as charging infrastructure operators. That's it. Thank you. Please, go and read the report. It's available on LinkedIn, and we'll keep coming with such venture debt reports every year. Thank you so much.